Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Friday, February 29th. February ended on a down note after steep losses in Friday's trading. Each of the major indices finished more than 2% lower, dragged down by underwhelming economic data and corporate headlines. Stocks opened trading lower today despite slightly better than expected personal consumption expenditure data. January PCE indicated personal spending increased 0.4% and income increased 0.3% from December, which is better than the 0.2% rise economists expected for both figures. Core PCE, a measure of inflation, increased 0.3%. That was in line with estimates. However, the Chicago Purchasing Managers Index posted a reading of 44.5 for February, which was short of the 49.5 consensus estimate. A reading below 50 indicates contraction in manufacturing activity throughout the Chicago region. Weak news from AIG weighed heavily on the broader market. AIG announced a net loss of $5.3 billion for its fourth quarter after yesterday's close. The company disclosed that the loss was triggered by larger write-downs than Wall Street was anticipating. Total write-downs for the quarter hit $14.3 billion, including $11 billion in credit swaps. According to Bloomberg.com, UBS believes collective write-downs for financial firms could total at least $600 billion. An economist from Goldman Sachs pegged the total number of write-downs at $400 billion. Current write-downs total $181 billion, according to Bloomberg.com. Financial stocks saw additional pressure as municipal bonds are being liquidated by hedge funds as managers are being forced to meet margin calls. The move comes as a strike against liquidity conditions. Bond insurer Ambac was sent lower when news surfaced that a potential bailout plan would not be coming as soon as believed. CNBC reported that the plan was stalled over the amount of capital that would be pledged by a consortium of banks. While the broader market remains strongly negative, as 97% of the members within the S&P 500 finished the day in negative territory, Gap provided a glimmer of green. The company announced after yesterday's close earnings results and an earnings outlook that were on par with analysts' estimates. The financial sector, which finished the day down 4%, led the remaining major economic sectors to finish the day in negative territory. All 10 sectors finished the day with losses in excess of 1%. 8 of the 10 were down more than 2%. In a flight to quality, the benchmark 10-year Treasury note finished the day 39 ticks higher, to in turn yield 3.5%. For the month, the S&P 500 finished down 3.5%. While the Dow finished 3% lower and the Nasdaq finished 5% lower. Commodities fared far better as gold and oil hit record highs, up 5.2% and 11% for the month respectively. The CRB Commodity Index finished February 11.7% higher. I'm Jeffrey Ham for Briefing.com. Thanks for listening and have a great weekend.